Hi, Matt McAleer, Director of Equity Strategies. Valentine's Day, February 14th, just after the close. Joined by my partner, John the Mousseau today. Busy day at Cumberland. We had our conference today, Global Trading Conference. Some fascinating topics. Bloomberg was on hand, hosted a session, Mike McAleer. We covered quite a bit in the fixed income, both domestically and globally, and had a wide range of breakouts. One of the more interesting ones was on payments and cryptocurrency. It's an area that gets a lot of headlines, a lot of positives, a lot of negatives mentioned. It's nice to try to dig deeper into what's driving that portion of the trading environment. You know, payments are very different than cryptocurrency itself, and sometimes they get lumped together. Take some time, visit our website, take a look at some of these outstanding panels, and I think you'll come away enriched. As far as equities go this week, a little bit of softness, 1% to 2% across the indexes. We did see some of that high momentum start to fade. As you know, not something that surprises us here. We had run into a situation that John likes to use, a situation where there were too many people on one side of the boat. And when we get there, we need to fade that a little bit. As I said in the last couple of weeks, with new accounts, we'd only been putting a portion of that money to work. We're looking for just a pullback that we can buy into, more reasonable risk reward. John's going to make a couple of comments on bonds in today's conference.
Great. Thanks, Matt. And it was a great conference, and I do encourage you to go on our website and see the link to the conference. And we were also very privileged to have Dr. Loretta Mester, who is the president of the Cleveland Federal Reserve Bank, also there today, and talked about payment schedules and cryptocurrencies and a host of other topics. I had the privilege of being on a bond panel along with Jay Bryson, who is the chief economist for Wells Fargo. And we covered the amount of government debt that's out there, which has been growing, the interest expense on that government debt, which has been growing, and looked at interest rates. And it's interesting because this week, you're pretty much ending up with the 10-year Treasury bond and muni yields just where you started last Friday. So the 10-year Treasury is around a 158. They got as cheap as a 163 during the week and then came back. And think about it, here you are going into a long weekend. What's the safest thing for investors to park money in going into a long weekend where you still have concerns about the coronavirus, quarantines, etc.? It's easy to park it in Treasuries. I think we saw that today. A more interesting part, though, is to look at some of the numbers we saw this week, and particularly the headline CPI number, which reached on a 12-month trailing basis 2.5%. The last time it was at 2.5% was almost a year and a half ago, September of 2018. Except the last time it was at 2.5%, the 10-year bond was at 3%, and now it's at a 160 roughly. So when you think about that, you say, well, what's changed? Well, what's changed in that period of time is global rates have much lower. So we've been attached to the global rates and also been lower. However, you can do the math. 2.5 minus 1.6 is 90 basis points of negative real yield. So when you look at that and you say, wow, I'm getting 160, but inflation's going ahead at 2.5%. We've looked back, time periods like this, they generally last somewhere around a year at the most, maybe a little longer, year and a half, but they don't last forever. And the time periods when you have normal bond yields higher than inflation, that is the standard state of affairs most of the time. We think we go back to that somewhere around this summer. But for now, people are basically looking at the coronavirus and saying, we need to be in the safety of treasuries. That will start to lift. That will start to go away. As the coronavirus gets more in the rearview mirror, we think you'll see that 10-year bond yield closer to 2%. Hope everybody has a great holiday weekend and happy Valentine's Day.
We'll see you next week.